Hi everyone, in this video we're going to talk about what we consider to be the highest impact tax credit right now in the digital marketing and e-commerce space. This credit has literally gotten our clients back tens of thousands of dollars that we want for you. In this video we'll get into what the R&D credit is, why digital marketers and e-commerce companies can now qualify for it, and how we typically work to get you the highest credit possible. We look forward to sharing these details with you, so let's get right into it.
Hello everybody. Today we are going to talk about the R&D tax credit. Now, over, I would say, the last 10 years, digital marketers and e-commerce companies have become very effective in bringing products to market. And as a result, it's created a space filled with competition and has driven some of the smarter players to move into technology and automation to get an edge. And it's been that trend that has moved digital marketing agencies as well as selling platforms and e-commerce companies to become great R&D candidates. So that's what we're going to talk about today. Quickly, before we dive into details, I will go over the broad agenda and we'll cover what the credit is, why you may qualify, as well as how R&D gets done. So I have two goals from this presentation. One is to convince you that you do qualify at some level for the R&D credit, and two, that you should claim it. And I know there's a lot of confusion when I speak to clients about the R&D around how to claim the credit. So we'll cover how we typically work as a proxy for how do you claim the R&D credit with a service provider. First, what is R&D? And second, do I qualify? Why you qualify? I'll just give some light history on R&D. Typically, when we think of R&D, we think of white lab coats, we think of engineering. Traditionally, that's been the case. And the R&D credit was established back in the 80s with the idea that Congress says that we as a country want to encourage our domestic companies to create innovations that are going to keep us competitive and growing as the leaders in all the industries. And really, that's been limited to engineering because science was largely physical. And as that trend has moved into the digital space, we've seen the definition of R&D grow. The mechanics of the credit are pretty straightforward. So you can claim the R&D credit in the current year, any open year that can be amended, you can claim the credit, and you can roll that credit back 5 years or carry it forward 20 years. And all that means is that if you don't need the credit this year, maybe you don't owe any taxes, well, hey, you can use it next year and the year after. It can be also taken against payroll taxes, which is important for some of our startup companies or companies that don't have huge tax liability on the income side, but do pay payroll taxes. What I want to be clear about is that a tax credit is very different than a tax deduction. A tax credit applies dollar for dollar against what you owe. So when we say that you can take it against payroll, what that means is, okay, if you don't owe any taxes, you might not need the R&D credit as an income tax credit, but you still have to pay FICA, Medicare taxes on every employee that you pay. So you can actually claim the credit against that. So it's a very useful credit. And we want to give some context around what activities qualify. So right up front, I always get clients who say, does digital marketing really qualify? And I want to take a second here to look at some of the things that, based on the 4-part test, which I'll discuss a little later, we've seen edge into the, either call it the gray area, call it black and white area of R&D activities. And some of those things include, we've got them listed here, I won't go through all of them, but to the extent that software is being developed, to the extent that internal improvements are being created that build intellectual property, or having design that is tech-based that leverage computer science language or algorithms. We've seen clients that have text-based SEO where algorithms are being leveraged in identifying what ranks. We've seen the use of AI. So we have a client that has a chat function that learns questions from prospects and constantly updates how those questions are responded to. And then, I want to be very clear that R&D encapsulates a wide range of activities from the sandbox stage of, hey, what are some good ideas that we can actually implement? What is the market dealing with? What kind of consumer research are we finding around that problem? All the way to implementing and iterating around the tech solution. So everything from sandbox to prototype is a wide range of activities activities that we want to kind of ask clients, where do you spend your time along this range? And depending on the responses, we can usually get to some level of R&D. So what can I claim? So the R&D credit is going to be based on expenses that you can say contribute to the development of a new idea, prototype, product, way of doing things. And the costs that can be include U.S. employee salaries, U.S. subcontract costs, and materials consumed in R&D. So those are pretty straightforward, but the punchline is that they need to be U.S. based. If you have developers in the Ukraine, if you have developers in South America or India, those aren't going to qualify for the credit. Now, there can be U.S. expenses as well as foreign expenses, but those foreign expenses are not going to qualify. Okay, so let's talk about some of the examples that we've seen over the last few years. And these are just a sample size of activities that have qualified, but we want to throw them up here just in case any of these resonate with what you're doing in your business. So definitely developing software as a platform tool, developing integrations that have two systems talk to each other, algorithms, design, evaluating the iterative process of any of these projects. Those are all activities that we're going to consider R&D. And again, there are some caveats around whether the final product is R&D and whether the company owns the IP to that product. So if you are developing and designing on behalf of clients and the clients have full use and rights to exploit the intellectual property developed, well, then that would be more contract development. However, if there is a distinction between the IP that goes to the client and the IP and processes that stay home, well, there is an argument to be made that the R&D on our side is still qualifying for the credit. And here are just another set of examples that we've seen. Certainly, you could imagine that any design that fits into a software product or project would be included. So sometimes we say, okay, well, you've included the developers on the team, but what about the designers that handle UX? What about the business development people that are giving feedback? Oftentimes we forget the CEO is very involved in reviewing. Oftentimes we forget that our marketing partners are very involved in giving feedback and somebody's handling that relationship. So we try to be very expansive in the initial steps of understanding who might all be involved in participating in R&D. Now, when you look to evaluate whether activities qualify for R&D, it is important to remember that there is a technical 4-part test that is explained in the Internal Revenue Code that needs to be evaluated beyond the intellectual armchair exercise of can it be sandbox, can it be iteration. There is an actual test that someone like myself or someone on my team or an R&D specialist would look at that is going to look at the actual language in the code and the activity to make sure that these 4 items are met. And the first is permitted purpose. So is this basically going to be used in the business? Again, I'm going to simplify a lot of this and just know that don't take and run with the information shared here. This goes down very granular into more detail, but we want you to understand it generally. So does it have a business purpose? Is this going to be leveraged in the market? Is it technological in nature is the second one. So hard science is the word that pops out in the code. And what that means is that there has to be some kind of science in this activity. It can't just be I sat and thought and that constitutes R&D. There needs to be somewhere along the process, code, algorithm, wireframing, some kind of implementation that is technological. And we can get expansive about that and we can be interpretive in what that is, but just note that that is a very important component of the 4-part test. The third is going to be process experimentation. So that's the iterative process. I tried this once, it didn't work. I tried again. I didn't know what the recipe was. I didn't follow a 5-step process that I got from somewhere else. I had to iterate myself, try and fail. That's how we get through the experimentation test. And lastly is elimination of uncertainty. There must be something that we're getting more clear on as we go. Usually, these are market results that we're trying to achieve. Conversion, for example, can satisfy this test. So if I'm able to increase my conversion rate on any campaign through a new algorithm that I've developed that scans how long people spend on a certain part of a page, if I'm able to manipulate that data somehow that increases my conversion rate, I've now satisfied the elimination of uncertainty, where uncertainty is the conversion rate. I don't know that any one campaign is going to for sure deliver a guaranteed result. However, engaging in R&D in this new product, project, feature, application, plugin has allowed me to decrease that uncertainty. Well, there you go. We've just met the 4-part test. So now that we've covered what R&D is, and I've given you some examples that qualify, I hope that you're starting to think about what projects are we doing that would satisfy. And usually the way I like to start conversations after we've assessed there might be some R&D with a client is I usually like to say, well, come to the table with a few of the projects and descriptions of those projects, and we'll talk about what the process is to figure out what your credit is. That's what this section is dedicated to. There's always a lot of confusion of how do we claim it? How do we work with an advisor? What is the advisor going to do? What is the bare minimum? What is the safest course of action for me to be CYA on a tax position? And we wanted to cover that here just to remove some of the uncertainty around how R&D engagements work. So first of all, just full disclosure, we are a R&D services and tax strategy firm. So as a part of our services, we do prepare R&D calculations. We do interviews to calculate the percentage of R&D, and we prepare the forms as well as documentation studies that explain and defend the credit. So just understand our context as we work through this. And as a result of that work, we have very consistently been able to generate results for our clients. And we like to kind of give 3 use cases. These are all generalized and numbers will vary, but generally for a small team that has R&D for sure, we're usually somewhere in the low teens in terms of credits. So there is value. In this case, there are 2 employees, 8 contractors, 7-figure revenue. It's not out of average to think about having a couple thousand to low teens to high teen tax credit depending on the activity and services and projects of that company. Then we talk about medium-sized businesses. These are businesses that have a team more than 5, maybe around 10, and maybe engage local contractors, maybe a development firm here in the US that have a pretty significant amount of expenses that can qualify. So if we're talking about something like $200,000 worth of R&D spend, then maybe we're talking about, let's say, $200,000 to $300,000, maybe $200,000 to $400,000. That's when you get into the 30s, 20s to 40 in terms of the R&D credit. A big point here you'll see is there's a separate subline for the state credit. So oftentimes this credit applies at the federal level as well as the state. So when we talk about numbers, oftentimes we'll say total credit and then we'll divide that between federal and state. A lot of our clients happen to be in high tax states that recognize R&D. Therefore, the R&D credit is just that much better for them. But again, I just want you to gauge size of company, size of credit. And generally, if you're looking at a medium-sized business that performs a strong amount of R&D, application development, integration, automation, it's not uncommon to have a credit in the 30 to 50 range. And then finally, we're talking about our enterprise level companies who have maybe 75 employees, 100 employees or more. Oftentimes, this is where we start getting into the longer conversations about what's actually performed, time studies, and oftentimes those credits can be 6 figures. Again, these are all dependent on costs incurred, so don't let revenue be the marker, although we do have examples. The real marker is the amount of spend. So sometimes we have startups with very low revenue, very high spend who qualify for a large amount of R&D. Elements of R&D engagement. So anytime you hire out R&D, you should be getting some of the following 4 things. Number 1 is calculations. That's what is my credit and really the starting point. You can't really get anywhere unless you know what the amounts are. Then you have the actual forms. So all the calculations are helpful, but meaningless from a tax authority perspective because unless you file those with your tax return, you're not able to claim the credit. So the credit is claimed on the tax forms. It's not separate. It is with the annual tax return. Therefore, at a minimum, calculations and forms should be provided on any engagement, unless you're just looking for a very high level exercise of, could I get an R&D credit? 3 and 4 is where we start getting into longer conversations with clients around, hey, if your provider gets hit by a bus tomorrow, wouldn't it make sense to have some kind of documentation that explains the methodology used in case it's ever questioned? The answer is usually yes. And that's going to depend on the size of the credit. If we're talking about a couple $1,000s, maybe you kind of leave that to the future. If it is reviewed, that conversation can have, but it might not make sense to have a 10 to 20 to 30 page documentation study for that size of credit. As the credit gets larger, we usually say around 30. That's when you start wanting to have some processes listed out. And the idea is you can take that report, put it in a drawer. If it's ever questioned by the IRS or the state, you hand it over. If everything goes to plan, they say, thank you very much. We wanted to make sure you had some documentation around this. It looks like you're covered. We're going to give you back, and we're going to look for some low-hanging fruit on your tax form instead of this R&D credit. So documentation is a super important process. Again, it depends on your perspective as a, VP of tax, business owner, CEO, but oftentimes these make sense when the credit is large enough. And then lastly is audit support. It's important to always ask, what level of defense do I get against this, right? Claiming the credit is offense, defense gets played way, way, way down the road. So if you're dealing with somebody that is a solo practitioner, a really good question is, how long are you going to do this for? Because if they go off and decide to do something else, you're kind of SOL once that gets questioned. Again, no one ever gets questioned the year that they file. Anyone filing in 2020 might hear back 2023, 2024. But again, you want to make sure that when you're dealing with somebody or a firm, you have faith and confidence that this is what they do. They've got some kind of guarantee, and they've really thought long and hard about this. Wanted to give some example of what the single year calculation form looks like. There's very high level viability calculations. And this is where we as a firm work. So we'll do a high level viability calc, which just means we're just trying to assess if it's there or not. Those are usually done quickly. They're done very high level. They're not done with interviews. They're not done in depth. It's really getting binary. Do you qualify? Yes. No, there's no qualification. No. We want to get a sense of, okay, you know what? The answer is yes. And we're seeing something in the 10 to 20 range. Do you want to start papering this up and going through the process? Then once you move past that, you get into a engagement where you're actually doing the credit, right? And that's doing the calculations and the forms. So you go through the process, you ask the questions, you document everyone's role, everyone's percentage time spent. And as a result of that, we usually are able to come up with 3 scenarios around R&D, one in which maybe we make some interpretations, 2 in which we use only survey data, 3 would be a very conservative approach. And we usually present those to clients and work through where we think the right answer is. My view is usually that the right answer is the right answer. If I can claim a high credit and I have support and I feel confident, I'm usually going to push clients to say, hey, this is the right answer. I'm not necessarily encouraging clients to play conservative if we have a right answer. So it's important though that we do have scenarios so that we can understand how to think about moving positions and which scenario we feel best with. Then we talk about documentation. So as a firm, we take the position that minimum documentation is required around 30K. So even if we're not going with the full robust study, we do recommend, and in fact require for most engagements, that there be some kind of write-up anytime the R&D credit creeps up to that level. And just in terms of workflow, something that we always hear back from clients is, I love the advice. I just wish it was easier to provide and receive information. So we just show this as an example. We have a login portal where we allow clients to access data. You get a login request right when you become a client. So it allows you to get right into the documentation phase without having to deal with any high barriers to entry. Our information request typically covers 4 very simple things. One is your project roadmap. That is, what kind of R&D have you engaged in? It is that list of projects we talked about. We do review financial data as a part of that, as well as understanding where everyone is in the organization. Our information requests are submitted via the portal. So you can see here that we're requesting an R&D functional interview survey. That's a very important part of the R&D because it allows us to get to the granular level of what is it that you do every day. We're obviously not able to interview everyone within the organization, but through the survey, we're able to take the information we've gotten, usually from the C-suite, usually from a senior person in the development organization or engineering organization, and we're able to tailor the questionnaire such that the employee, someone working in the organization, is going to be able to very quickly say, yes, I worked on that. It took this many hours, so on and so forth. Everyone in the organization would get a R&D functional interview request via the portal, very easy to get. And based on that, they're able to fill out a online survey that's hosted on our website. It's password protected, so only the employees of that organization have that password and only we have access to that. And this is super important because oftentimes clients ask us, how long is this going to take? How are you going to get all the information from all my people? We're very busy. How in the world are you going to get what you need without giving me a headache scheduling interviews between consultant, you guys, and my team who are doing the things that I want them to do? The answer is we do everything online in a safe, secure way. Once we have the answers from the functional interview, what we do is we put them into a matrix that basically break out every individual's functional role. As you can see here, you're seeing Kelly, the CEO, and how she splits her time across these 5 main functional categories, right? And CEOs spend a lot of time doing a lot of things. So we have to take the position of, based on the survey data, this is how Kelly breaks out her time. And we'll review this with clients in a way that allows us to understand how the whole organization responds and reacts to technical marketing, to everyday roles, business development, actual ideation, UX and UI. And as you can see, the goal is to come up with something that, if you look to the second to far right column, you see this R&D percentage. This is what we're saying at the end of the day, this is how much time is qualifying R&D activities. And the very far right column is the corresponding cost. So the punchline here is that we calculate employee by employer, contractor by contractor, to look at what the percentage R&D is and the cost of that associated employee or contractor. As a result, we get our qualified research expenses. You can see that in the bottom right. With that, we flow into the actual R&D calculation scenarios. And what you can see here is there's 3 scenarios. I won't get too much into detail. Point being that at the end of the day, we have some level of total qualified research expense. And as a result of that total qualified research expense, or QREs, there's a corresponding federal and state credit. And that gives us our total credit. Based on these numbers, we have scenario 1 of $116K of R&D credit. Scenario 2 is 74. Scenario 3 is 49. So in this situation, we have a high to low scenario. And there would be different assumptions under which scenario 1 was presented, under which scenario 2 was presented, scenario 3. It's not just us saying, hey, let's decrease the right answer. Each of these are based on taking different positions. And depending on how the functional interview is structured, I might say, look, I feel very confident in the highest scenario. Clients sometimes push back and they say, hey, look, I'm always a guy that goes middle of the road. I might say, look, I understand, but all the documentation, all the answers point to scenario 1. I think that's the direction we should go. That's a conversation that is going to change client by client, but I did want to kind of paint the picture of what that looks like. And finally, I did want to give a sense of how firms charge for studies so that it becomes very clear that it's really dependent not just on the size of the credit, but on the level of activities performed and the amount of work that needs to be performed. So going back to what we were saying earlier, R&D Engagements will have some element of calculations and forms, of documentation and audit defense. In this case, we're displaying what the documentation fees might be based on these scenarios. So we say for a small one, it's very common, and this is going to be on the low end. If you look at the rest of the market, we have a fixed fee structure that we'd show here. But on the low end, a study would range from $2,000 to $4,000. Now, if your credit is worth $1,200, this isn't going to make a lot of sense. But if it's worth 10, if it's worth 15, this is where a little insurance goes a long way. Again, not here to sell you, but I want you to be clear on how the industry will bill or how these engagements will go for a company of your size. Generally, you're going to find that the 4 to 8, that middle road, is where a lot of these documentations will sit. But again, a documentation is up to you. Calculations and forms could be sufficient for your purposes. But if you want to start looking at that? How do I make sure that all this gets papered up? If I ever get audited, would this documentation piece cover me instead of doing a audit engagement and having to revisit everything and we would be under a tight deadline? This is a longer conversation, but to be completely transparent, we want you to know that this only works if you can get a large multiple in credits on what the service cost is. We know that, you know that. Generally, this is where an engagement like this is going to sit. But again, the question is, do you want to lock in audit support now and have the documentation, be able to review it all live and fresh, and it's going to cover the entire organization's calculation, the entire organization's functions, and the description of how all of this is calculated? Do you want that now, or do you want to deal with that later? That's the question that the documentation gets at. But again, the minimum route of doing a form and calculation is also an avenue you can take. So questions that our clients ask and should be asking, we just want to go through these very quickly. Usually the question is, can I claim this on prior years? And the answer is yes. So if you do a R&D study and you find out this is really big and we're doing it for the first time in 2019, but we've been doing the same thing since 2016, it probably makes sense to amend those tax returns to reflect the R&D. Because what we're talking about, again, if it's $20,000 per year, could be $80,000 on the whole. For $80,000 credit for credit, this could be a business changer, right? We're not talking about financing $80,000 interest free. We're literally talking like $18,000 in unclaimed credits based on a tax form. So super important you get clear on what the calculation is and whether it applies to prior years. Do I need to keep the IP in order to claim the credit? I touched on this, but it's a really good question, because if you're contract developing, meaning that you're developing applications and plugins and softwares that ultimately a third party owns, well, that's not necessarily R&D on your part. Those aren't developing processes and innovations that you're going to continue building on. However, the answer should be a little more nuanced. You should look at, are there processes that you retain that are constantly being built on? And that's where it's really important to get into workflows and into segmenting what stays home versus what gets sold. I'm not sure if our business qualifies for R&D. How do I find out? This is kind of a layup. I mean, number one, you can look at the Internal Revenue Code on R&D. Number two, we've got resources and white papers on R&D and digital marketing agencies. But the short answer would be talk to someone who does it. There's probably a conversation that is going to give you a lot more than you doing hours and hours and hours of research to become an expert at something that somebody does for a living. So definitely connect with a resource if you're really serious and are still kind of on the fence on whether or not you qualify. How can I claim the R&D credit as an individual or as a company? So you can do it either way. It does depend on your entity structure. So if you're a C Corp, you're going to claim it. As a company, it's going to stay with the company. If you are an S Corp or an LLC or a partnership, you're going to claim it at the company level first on that tax return. And then you're going to get a K-1 reflecting that amount. And then there are forms that you need to fill out at the individual level to claim the R&D credit. And we often work directly with your general CPA, much like you would work with a physician and a specialist. We're usually the R&D specialists that talk to your general CPA, either at an individual level or business level. How do I defend my credit if I'm ever challenged by the IRS or state? That's where we say, look, you can always defend things as they come up. And we've been in a few audits where we've had to do that. Or we've been in audits where we've been hired after the initial tax credit forms were prepared, maybe by another firm, and we came in just as defense. It's much harder to fact find in arrears, meaning if you really want to get crystal clear on defense, it makes sense to create a defensive document now or contemporaneously so that if it ever does, when it ever does, you can pull it out of the door, hand it over, and close it out. So that's where we get into documentation. And that's really the value in being able to prepare something like that. And last question, how much of my time will going through this process take? It really depends on the number of employees and projects, but generally we have been very good about limiting our work to something like 3 functional calls. And that means maybe it's COO, maybe it's CEO, but there's some quarterback, someone who's handling the credit that we work directly with. And then we are very, very conscious of time constraints when doing these types of interviews. Oftentimes we're meeting with the COO who is very knowledgeable about what goes on in the organization. We're talking to a VP or senior developer in the engineering or development organization. And then we'll speak to someone usually in a hybrid role like design, marketing, or UX who is going to have some kind of peripheral natural interaction with R&D that is going to create the logic for bringing additional time in and additional functions and roles. So again, we've gotten really good at limiting the amount of interview time, but to answer that question, if you can upload to a portal and you can coordinate 3 to 4 calls, you've got the time. Finally, I want to thank everyone for sitting through this. I hope you've learned something about what the R&D credit is. My goals, again, were helping you understand what it is, helping you understand that you at some level qualify, and then lastly, to convince you in some form to go out and claim this credit. Thank you so much for your time. If you have any questions, you can always get a hold of our team at info@mytaxhack.com. We look forward to connecting.